Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. With us is Rick Ackerman. You know him well, rickackerman.com, his hidden pivot system. He's right on the money so often, I can't even keep track of it anymore. And I mean that. Cycles and technical analysis, when you've got markets like what we're in now, really are going to outdo the fundamentals, value-based systems every time. Rick, how are you?
Good, Kerry. Thanks for having me on.
Hey, always a pleasure. So what is going on right now with these markets? I mean, it's so hard to really track them and really understand what's going on here that I find myself shaking my head a lot. What's your take here?
Well, we all know it's going to end badly, Kerry, but few of us, certainly not I, had the imagination to see how long the game could go on. Right now, to me, it looks like the quote-unquote economic recovery is based primarily on auto leases and to some extent some breakaway acceleration in home prices in some of the big cities. But that's about it. We've had the asset inflation in spades, and it certainly has not lifted all boats. The real incomes have stagnated, and so it remains the weakest recovery of the post-war period. That's one reason why I think the Fed's all the blather about how they're going to raise interest rates is just a bluff.
Yeah, well, we felt that way for a long time, haven't we? I mean, look, how can they afford to raise interest rates in reality here? Is there any way they can afford to do it?
Well, I'm afraid that they're, just to save face, they're going to try maybe 10 or 20 basis points, but I feel very strongly that could be the turn of the screw that trips a deflationary juggernaut that's been waiting to implode.
Yeah, and it's going to be a nightmare if they do that. I mean, what's going to happen here? It's just going to be a cluster, you know what?
Yeah, for sure. And very frustrating in the meantime to short the market. I put out a target last week that I drum rolled, put a spotlight on it, shouted it from the rooftop, and I couldn't get short it myself. It was 2038 basis the E-mini S&Ps, and there was another one just 2 ticks from that. There were essentially 2 very large patterns that aligned in the S&Ps, S&P 500, to yield what I call a hidden resistance target that was within 2 of them that were within a couple of ticks of each other. So I knew there was going to be real stopping power there. And we got within 4 points of that target last week, and I thought, okay, well, I had 2 choices. I could get short ahead of a 3-day weekend, which is very risky, or I could come in on Tuesday today and wait for just those few extra points to get me to that target. But we all know what happened now. I mean, the Dow has been down. S&Ps actually have been down as much as 26 points, Dow off at the lows something like 230 points. So I didn't exactly get a great chance to get my short off there at 2038.
That must be frustrating, huh?
Well, I can. My system gives me a very, very accurate calls on swing points. I can't tell you whether that 2038 is going to be the mother of all tops, but I can certainly get short there with a very tight stop loss, at least in theory. But since we're already down pretty good here, I can say that there is that chance that the bull market has seen its high. And the odds are never going to be with you on that kind of call because this bull market has been chugging along for more than 6 years. But I can tell you at least that we stood to have an important top, and as of this moment, it's looking at least somewhat important.
Yeah, it's hard to believe how long that bull market has been going on. It could keep going on. How much longer can it go on? You have to wonder.
Well, a lot longer than any of us had imagined initially. There's been so many reasons to think, well, this market's had it. But of course, you're going up against a global easing. We've got essentially a flood tide of money in this world. And one part of that is that a lot of companies have taken the easy route of improving their earnings by simply shrinking their float. So companies that are flush with cash, that have tens of billions of dollars in surplus, are in there borrowing, not just in U.S. markets, but in European markets, simply because they can. They can borrow money for next to nothing. They buy their own shares, and of course, that has the effect of increasing earnings per share. And we know that can't go on forever. If companies are borrowing all this money to put it in their own stock because they can't find some more productive use of capital. So you can see where that has to end badly. But again, it's going on for so long, and it's a big number. You're talking about $1 trillion plus of corporate buying of their own shares, and that's certainly been a big factor in the ongoing bull market.
Yeah, this is really a bad thing too, that you really have all of these companies that are weakening their balance sheet because they're not investing in their companies, because the market potential for new products, new services isn't there. And so they buy back shares, artificially inflate their per share price. Is this any good for the economy?
Well, you can see that the working man is not doing that well, and we've got this bottom-up activism concerning the minimum wage. Everybody wants to take it out of the hide of McDonald's and other big employers in entry-level jobs, but we all know that flouts economic law. If you raise the price of hiring an unskilled worker to $15 an hour, all these companies are going to figure out ways to do with far fewer employees, assuming they survive. And McDonald's will certainly be a survivor, but it should be interesting to see how they handle all these groups that are springing up to push, with the help of cities like Seattle, to push the minimum wage to $15 an hour.
Yeah, isn't that a great thing? I mean, all you have to do to improve the plight of the working man is just mandate that employers pay more, and everything's going to work out fine, right?
Right. That's the Democratic way, Democratic Party way of doing things, and of course, it flouts economic sense. It's of course no great surprise that economists come out to support that. People like Paul Krugman, I guess, but the common sense of it says that you're just going to get less hiring if you raise the price.
Yeah, exactly. You know it. I know it. Anyone with half a brain knows that this thing is not going to work out well, that not only do you get less hiring, but you actually have people getting fired. You get less employment is what you get, right? I mean, this is the way it works. This is economic reality. This has been proven in study after study, going back to the end of World War II. Minimum wage, the minimum wage in and of itself doesn't matter, because if you set the minimum wage below the natural minimum wage, it will have no effect. But when the minimum wage is greater than the what I would call the natural minimum wage, then it will have the effect of costing the most vulnerable members of society their jobs. It can't work any other way, can it?
No, I don't think it can.
Yeah. So this great experiment is going to be a major loser. So we know this already, you and I, and we will watch as the ranks of youth unemployment, minority youth unemployment, skyrockets, which it's going to do, right?
Well, the silver lining is it can't skyrocket in a place like Baltimore because no one has a job.
Yeah, well, if you have no job already, but even the people that do, people working in McDonald's, a lot of them are going to lose their jobs to kiosks and robots. because all of a sudden the robot's looking better and better, where you might not want to make that capital investment. You'll decide to make it all of a sudden because it's going to justify itself.
There's a great new book out. I wish I could remember the title, but I only recall the review, and it talks about the theory, about robots replacing all the jobs is wrong. And, there is a tendency to think this time it's different because machines are so clever now that they can do things that we couldn't have even imagined 10 years ago, right? So we've got automated checkouts at Safeway and the bank teller. Well, actually, the bank tellers haven't disappeared. Since ATMs came in the 70s, it's actually increased employment simply because the banks got their costs down and it allowed them to open more branches. But this book sort of goes back into the history of the Industrial Revolution, and there was a time. Things were written about the loom, that the loom was actually going to destroy the textile business.
The Luddites, right?
Not Luddites, really, but there was a very specific idea that the loom in particular was going to destroy the handicraft of fabric making. And, what we've had instead is essentially the growth of a huge global textile business. And the case that this book makes about the computers and the age of digital this and that is that the dislocation is going to be very difficult, but that eventually we will have more jobs than mechanized and robotic work will have displaced.
I'll buy that is possible. But I think when you start getting into driverless cars and trucks and the getting rid of the need for that type of thing and mortgage processors and, we get into all these things, it's going to be more challenging, and the need for a better trained workforce, smarter, that the schools aren't producing is really going to put that to a challenge. But
the schools, that's a big thing. We're not going to have this transition to a brighter tomorrow unless the schools get with the program. And I think we're kind of headed in reverse there with Common Core and some other Democratic Party quasi-socialist ideas about what schools should be. But, that's a very big problem. We've gotten away from PTA meetings and parents taking an interest in the local schools simply because both parents are so busy just trying to pay the bills. We've got working couples now, and who's got the time for a PTA meeting? But that's really why our schools have gone downhill, is because
among others,
local interest was not there.
Yeah, there are a number of reasons why, but we had what's his name, Price on. Can't remember, but he covers it. It's been deliberately engineered, according to him, the collapse of American education by the progressives. And this is all part of a progressive plan to dumb down the population. And Common Core is just an amalgamation of every bad idea that's been tried in education for the past 25 years. And he documents it pretty damn persuasively, I have to say. He convinced me, and I'm pretty skeptical of this stuff. But in any event, so what about our good friends gold and silver? Any hope for them in this market? They emerging, you think?
Well, that word, I try never to use the word hope in my newsletter. I always refer to
change.
Hope as the last refuge of losers.
Yeah.
And, my own forecast for gold is $817 an ounce basis the COMEX futures. So it's got quite a ways to fall. I'm always willing to change my mind. If I see a promising rally on the hourly chart, I'll certainly take a long position in gold, but you better believe I've got a tight stop below it.
Uh-huh.
And but my longer term outlook is for low 800s on gold.
Low 800s, huh?
Right. It doesn't. I still have a maple leaf sitting out on my desk to remind me that you should hold on to it anyway. I mean, even though I've got my own forecast, I've also got a safe box full of gold, platinum, silver rounds and coins. So I'm holding on to them anyway, even though my technical outlook is not exactly bullish.
Yeah, it's an insurance policy, as we've said many, many a time. And you have to accumulate when the time is right, when the price is right, because you don't always get to purchase it when the market is most favorable. If you can pick the exact moment that it's all good, then you're a better trader than I am, which isn't
Well,
too hard.
some of my traders get enamored of some of the lunatic forecasts in gold. I think Jim Sinclair has been talking about. I don't even know what his number is. It's maybe $50,000 an ounce. And I always ask my subscribers the somewhat rhetorical question: are you going to be quick enough and smart enough to find some dumb farmer to sell you his whole farm for a handful of Krugerrands? So if gold's going to $50,000 an ounce, you better be nimble trading out of that gold for something you can eat.
I'm sorry, that's pretty funny. Yeah, well, I'm not smart enough to catch that wave. Never have been. I never will be. I know it. So we'll just take
Let
our
me add a
chances.
thought based on my experience as a floor trader. I could say at the theoretical level, there is the prospect of $50,000 gold, simply because there's so many paper claims against gold that you could have a short squeeze. In other words, everybody who holds some paper certificate, whether it's an ETF or whatever, that says they're entitled to X ounces of gold, they could exercise that claim. And of course, there would be a squeeze on physical. The people on the other side of those trades, namely Goldman Sachs, J.P. Morgan, Morgan Stanley, the bullion bankers, they would have to deliver. But you have to ask yourself, would there ever come a time in the history of this country or in the history of securities regulation where the regulators say, okay, Goldman, okay, J.P. Morgan, okay, Morgan Stanley, you did a bad thing and you're going to have to pay up. You're going to have to redeem all these certificates in physical gold. That'll never happen. The regulators will never, ever, ever cause the paper claims against gold to be exercised in some sort of crisis. So I think that's the catch-22 of a short squeeze on gold that could push it to 5,000 or 10,000 or whatever have you. It's theoretically possible, but at the political and regulatory level, it will never happen.
Yeah, inclined to agree with you. I really am. I just can't see it.
Well, it's not like gold is the only thing out there. One other thing I've been shouting from the rooftops is bonds, bonds, bonds. And I love the T-bonds down here. They have been slammed. They've really been hit hard. But you have to look at the longer-term logic. Why have bonds been hit? Well, because people think that the Fed's going to do what it says it's going to do. But we know they can't. We know they can't tighten because 10, 20, 30 basis points, and they're going to sink the whole financial system. So there's so many ways that the long bond can win right now. Problems in Europe, geopolitical crisis, flight to safety. There's a list of half a dozen things there that will all push treasuries higher. The only thing that does not is inflation. So if you believe in inflation, and by all means, go out there, short the bond, short the dollar. But I think you have to be crazy. It's a great bet, and I like being on the opposite side of the bet with someone like Bill Gross has been saying that T-bonds are the short of a lifetime, but he hasn't been right in a while. And I think just the opposite, that long-term bonds are a huge buy on this very savage correction, and there's no way they're not going to turn around.
Yeah, I've always been wrong, so I don't know. Hard to know these things. But Rick, you've got a good track record. and you've been pretty spot on so far. So it's going to be interesting to see. Just tell us where we find you, how do we get our free subscription there, all the good stuff.
If you go to rickackerman.com, I've got up at the top, there's a tab Join, and there's Home, there's About, there's a chat room, but click on Join at the top of rickackerman.com, and I've got a 2-week trial subscription out there, no risk, and I'm sure once people are on board, they're going to love it. I've got a chat room that goes round the clock that draws some really great traders from around the world, and a lot of good ideas in there.
All right, so rickackerman.com. As always, you'll find the link in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up in the box there for our free newsletter and our free webinars. We just had a couple of great ones with John Embry and Rick Rule of the Sprott organization. It's free. Sign up so you can get the links and view the replays. It's really compelling stuff. And maybe we'll have a webinar with Rick one of these days. I think that would really be great. If you're up to it, Rick.
Sure am. You just give me the word.
All right.
And we'll do it.
Yeah, well, we will definitely do it soon, Rick. And hey, it's definitely fun. And next time you're in Florida, we will get together again, or when I'm out west. And hey, thanks for being on. Always a pleasure.
Likewise, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.